presentation contains current opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Mo's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Mo.
Hello everyone and welcome to the Compact YouTube update for September the 16th, 2024. I'm Mo Ansari, President of Compact Asset Management. Thank you for joining me today. First of all, I want to remind all of you to make sure you subscribe to this. Go to compact.com/media and you will get all the updates, the podcast and the weekly newsletter and all of the events that we do. So make sure you subscribe to this channel so whenever I do an update, you will be notified, and whenever we post the podcast, which we will later on today, you will get the long version of what I'm going to talk about today. So let's talk about what happened last week. Again, the week before, terrible market. Last week, great. We got back just about all that we had given up the week before. We saw the S&P gain 4%, the Russell up 4.39%, the NASDAQ kept roaring back up nearly 6% for the week. So again, it's September, volatility. We talked about this in July and June and May, that we are going to get the volatility August and September. As I said on August 5th, that I think we had made a bottom on that pullback. I think we did, but we're still in this September-October timeframe, still a lot of volatility to go through. Technology was the worst week the week before. Last week, technology was the best sector, gaining 7.3%. Energy drifted down, but as I mentioned last week, I thought we were getting to the bottom of that and we should get a bounce back up. As I look at the charts, I think we're going to bounce back up in energy. We're a little bit overdone to the downside. Consumer discretionary, the small caps also gained last week. Oil below $70 a barrel. I think we're just bouncing around here in oil. Interest rates continue to move lower. The big event for the week is going to be how much is the question. Not if the Fed is going to cut interest rates, but how much. Are they going to do 0.25, a quarter of 1%, or are they going to do 0.50, half a percent? Probability is about 70% chance they're going to do 25 basis points, 50% chance that they're going to do 50 basis points or half a percent. I think they should do 50. Economy is slowing down. Unemployment is starting to go up. It's not gone up yet. We're still creating jobs, not losing jobs. But the job rate growth has slowed down dramatically. I think, again, as I've mentioned over the years, as you listen to the radio broadcast and now this podcast and the YouTube updates, that by the time unemployment starts to go up, the economy has slowed dramatically. That's what we have seen over all of that time frame. That's by the time it's obvious, it's history as far as the market is concerned. So we're seeing that right now, and I think the Fed needs to get ahead of the curve, just like they were so far behind in raising interest rates when the inflation came. Then they had to raise rates dramatically. Same thing could happen, that if the unemployment starts to go up, they'll have to reduce interest rates. But if they reduce by 50 basis points, they could say it's a political move. So I think they're going to wait till November 6th and 7th. That's the next Fed meeting after this weekend. So they should do 25 basis points this time around and then 50, even though I believe they should do half a percent this week. Small cap versus large revenue sources. You look at the Russell, foreign earnings, only 24%. Domestic earnings are 76% for small caps. On the other hand, large caps, 58% in international and 42% is domestic. So 58% domestic, 42% foreign. So if we do see the economy slowing down around the world, which we are seeing, it is impacting the large caps more than the small caps. And that's what we're seeing right now in this particular situation. So if we do see interest rates coming down, which they are expected to continue to come down over the next year and a half, not just this week, that should have a much bigger impact overall on small caps. And that's why I think small caps, even though they've lagged this year, I still think there's an opportunity this year. Again, the big news this week is going to be the Fed meeting. They'll start the meeting tomorrow, then they will announce it at 2 p.m. Eastern Time, 11 a.m. Pacific Time, their decision on what they did with rates. Then at 11:30, there's Fed Chair Powell press conference, where he made it abundantly clear last time that they're going to cut interest rates at this meeting. But they might give us more thinking of how much, why they did, what are they looking at, and so on. Not a lot of retail sales come out this week. They're expected to be down 0.2%. That's of 1%. That's compared to a 1% increase last time. Retail sales are a big deal. If they come out lower than expected, that means the consumer is starting to slow down. That's going to be something to watch very closely. Housing is still doing well. There's just a shortage of housing. That's the bottom line. And as rates have come down, mortgages have come down, and that could support the housing market. Existing home sales come out there just about expected to be unchanged this week. Again, we've broken out above the 50-day moving average. Outside key reversal. This bar right here on last Wednesday, where the market went below the previous day's low, closed above the previous day's high, that was a key reversal, as it's called technically. And it also broke above the 50-day moving average, which is 55.12. Now we're above the 20-day moving average, which is the red line. We're above the 55.47. We're trading this morning around 56.30. Resistance is right here, about 56.5, and these are the double tops we've made. If we can break out above this, that would be a good sign. Again, target comes on the fifth wave to about 5,800 plus or minus. A little bit of resistance right here, close to 56.75, and if you can get above that, we're looking at about 5,800 plus or minus. Are we going to go there straight? I think, again, we'll get this rate cut. We could see the market back off after the rate cut. We also have the government, which can't get its act together. Republicans can't get the House to agree on their caucus to agree on a spending bill, a continuing resolution. And there could be a problem with the government shutting down at the end of this month. If it does, it's going to be politically, I think, a problem for the Republicans to go through that. So I think they'll come up with some kind of agreement to push that forward where we get past the election. But again, that could be something that could impact the market. So if the government shuts down at the end of this month, again, when the Social Security checks go out, all of the things that could be impacted, and again, this happens every 6 months or so when they have to pass a continuing resolution or come up with a budget bill, and they go through this every 6, 7 months or a year. Every year or every 6, 7 months now we hear about this. So I think they'll come up with some kind, but in the short term, it could again create some volatility, including what the Fed does on Wednesday, what they announce, and what they say could create some more volatility. So if they do cut rates more than expected, we could go straight up, or we completed the fourth wave on the downside, wave 1, 2, 3, 4, then we go to 5, which if we can break above the 5,700, we could get going to the upside. On the weekly charts, this was the major support that I talked about 2 weeks ago. We came and tested it, this red line, kissed it twice, bounced right off of it. Here we are right back up. Again, long-term targets are about up here, but that's, again, could be weeks away, months away, because each one of these vertical green and red lines that you see is 1 week of trading, and it goes back all the way back to the beginning of nearly 2021. So this goes back about 3 years, this chart, all the way back here. So all these months that you see, this is 24, this is 23, all of 23, this is all of 22, and this is all of nearly 21, and so on. So this chart goes back quite a few years, and so it's a weekly chart. So it's a long-term chart, and this target is a long-term target. But as I said, might have completed wave 4 on the weekly charts, and if we have, and we can break out above this, is this going to be extension of wave 3, or is this going to be a wave 5? Looking at the NASDAQ, we did get back above the 50-day moving average, which is about 17.5. We're trading at about 17.6 this morning. Target again, long term. I still think we're just in a back and forth, back and forth, back and forth on the technicals on the Nasdaq. Because we are the dot plot, it's negative right now for the Nasdaq. When these dots are above the market, this is the market right here, the vertical lines, and as long as we are below these dots, the market is in a negative mode. And but it does take a few weeks. When we turn down, I said usually 6, 7, 8 weeks is what we see on the downside, like we did here. This was October of 2021, and then we took off to the upside. The market got above, the dots were below, as I call it, my dot plot. You heard from the Fed, they've got their dot plot and what they expect interest rates to do. I've got my dot plot, which shows us what I expect the market to do. 10-year yield has come down dramatically, as you can see. This is the rate chart. Rates have been coming down. I think we're a little bit overdone on the downside. Could get a bounce back up to 3.75. We're about 3.62 today. So we should get some rates going up a little bit. Oil, which looks like it's made a short-term bottom. We got all the way down here, close to $65 a barrel. First resistance is 71.5. We're trading about $70 a barrel this morning. Then we've got about 75.66. Small caps, again, came to the 20. This is a weekly chart, 20-week moving average. This red line came and tested it. Now we're looking like we could get back up, but we got to get above this 230 area. Then 245 is this high right about here. If we can get above there, then the long-term target 258 to 285. But that again, weekly chart, going back 3.5, 4 years, the chart right here. So we're looking at maybe a longer-term move to the upside. Gold still looks good, but I think we're getting a little tired on the upside. But lower interest rates are going to support the gold market. Lower interest rates pull the dollar down. That pushes the dollar up, the gold market up. We're looking at about 25.5 support, then 2,500 plus or minus. We're trading about 2,600 this morning in the gold market. Those are my thoughts. Those, if you want a much more detailed analysis of what we're thinking, what we're doing, tune into the podcast. Javed and I will talk about about half an hour, 45 minutes of an update of what we're looking at, what we're thinking. So make sure you subscribe to that if you would like to listen to the free update. If you want to get this on a weekly basis, this YouTube update, make sure you subscribe to this channel so whenever we do an update, you're notified. If you need help with your portfolio, go to invest@compact.com. Send us a quick email or give us a call. We will be more than happy to give you a call back and give you some ideas what you should and should not be doing with your portfolio. How do you get from where you are now to where you want to go financially? All of that is free, but you have to take the initiative. Those are my thoughts. Those are my observations for this week. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moez Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compact Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.